This is ShadowQuant, Market Brief, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, July 7, 2026, and this is the New York session. Now, let's get into it. Equities closed higher on Tuesday, but the disconnect between the S&P 500's green close and the market's extreme fear sentiment score tells a different story. With U.S. military strikes confirmed against Iran and the Strait of Hormuz in the crosshairs, the rally in tech masks a fragile risk environment. We are looking at a market holding its breath.
The S&P 500 closed at $751.28, up 0.8%. The Nasdaq 100 led the way, gaining 1.4% to close at $722.82. The Dow added 42 cents to reach $530.09. Small caps, tracked by the Russell 2000, finished at $298.90, up 0.4%.
While the indices are green, the technicals on the Nasdaq tell a story of capped upside. Let's look at the corporate news driving these moves.
Earnings season remains quiet today, but the headline risk is clear. Core Scientific turned lower after its fourth quarter results disappointed, signaling pressure in the crypto mining sector. Meanwhile, Digital Chamber filed an amicus brief urging the dismissal of a New York lawsuit involving 39,069 Bitcoin wallets.
With earnings off the table, the market is reacting to macro headlines and geopolitical shocks. Let's get to the economic data. The macro backdrop is defined by two conflicting signals. First, the yield curve remains flat. The spread between the 2-year and 10-year Treasury yields is positive 36 basis points, as of yesterday's close, with the 10-year yield sitting at 4.48%. This flat curve suggests caution in long-term growth expectations. That brings us to the risk desk. The headlines are loud, but is the market pricing it in?
The risk desk is flagging a significant divergence. The VIX closed at 15.81, down 34 points from the previous session. This low volatility reading clashes directly with the crypto fear and greed index, which sits at 14 out of 100, indicating extreme fear.
A low VIX amidst extreme fear and geopolitical escalation is a classic setup for a volatility squeeze. Let's look at what's next.
Here are 3 things to watch this week. First, the VIX. If the low volatility holds while geopolitical tensions escalate, we could see a sharp repricing of risk. Second, the Reserve Bank of Australia decision on Wednesday at 2:30 a.m. Eastern. Any hawkish surprise could strengthen the Australian dollar and pressure global rates. Third, the Nasdaq 100. It closed above its 100-hour moving average, but sellers remain in control. A break below that level could trigger further technical selling in tech.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.